This video goes over the allowance method for uncollectible accounts. With the allowance method, you book to a new account called Allowance for Doubtful Accounts before you write off uncollectible to accounts receivable. So there is an extra step. The debit account is the same, bad debt expense, but now instead of crediting accounts receivable, you credit allowance for doubtful accounts. What is very important here is that this allowance is an estimated amount of uncollectible. The accounting rule is that when you have an accounts receivable, you must estimate how much these accounts receivable will be uncollectible. For sure, not all accounts receivable will be collectible for the reasons we talked about earlier, and this is similar idea to sales that we had in a prior lecture. You need to estimate how much sales will be returned. Here it is how much accounts receivable will be uncollectible. An estimate will be based on relationship, history of dealing with the customer, industry estimates, and so forth. On December 31st, 2017, Xtone estimates that a total of $30,000 will be uncollectible. So right away, debit bad debt expense and credit allowance for doubtful accounts. $30,000. Allowance for doubtful accounts. Know that this is a contra asset account, which means it is opposite of accounts receivable. When the company indicates its accounts receivable balance, it must also indicate its allowance for doubtful accounts. So if accounts receivable is $10,000 and allowance for doubtful accounts is $2,000, it's an offset to the accounts receivable, meaning that it's actually only $8,000 will be accounts receivable, will be collected. We have to net the two together, and allowance for doubtful accounts is the offset of accounts receivable. It's the opposite. It's the negative amount, if you will. And accounts receivable normal balance is a debit. Allowance for doubtful accounts balance normal side is a credit. Allowance for doubtful accounts increase on the credit side while accounts receivable balance increase on the debit side. That's why it's called a contra asset account. It offsets the accounts receivable asset account. Bad debt expense. We know it is an expense account, so it impacts the income statement. What is the impact? It reduces profit, earnings, or net income. We call it the bottom line. We call the gap matching principle. Expenses like bad debt expense must be recorded in the same period as revenue, as sales. That's the matching principle. And for this same reason, this is the preferred method of GAAP, generally accepted accounting principle, and is required by accounting regulation. What type of account is the allowance for doubtful accounts again? It is an asset account, but it is a contra asset. So it's like the same as asset, however, it reduces asset. It's a contra asset. Allowance account goes on the balance sheet, the net of accounts receivable and allowance for doubtful accounts. We call this the net realizable value of receivables. So if accounts receivable is $200,000 and the allowance for doubtful accounts, meaning that we don't expect to receive $30,000, then the net realizable value of receivables is $170,000. When a customer's account is identified as uncollectible, it is not written off to accounts receivable. We don't reduce accounts receivable right away as in the direct write-off method. In this case, we have an intermediary step where we write it off to the allowance for doubtful accounts. Think of it as a reserve balance. It's not introduced in the book that way, but in my experience working in the accounting field, that is how it is referred to, as a reserve balance. Then, when the actual amount of write-off is recognized, you would then use some or all of the reserve that was established in this allowance account. And remember, we estimate how much is the allowance, how much will be uncollectible, and we book it to this allowance account.